friends, welcome to Ramsas Deva classes. In this session, we are going to cover another deduction under Section 80G of the Income Tax Act, which is deduction for contributions made and donations to certain relief funds and charitable institutions. So let's find it out. So friends, let's now discuss about the deduction under Section 80G of the Income Tax Act. The first thing is who can claim this deduction. The deduction can be claimed by individuals, firm, companies, HUF, NRIs, or any other person can claim this deduction. Secondly, are all donations made eligible for deduction under Section 80G? The answer is no. All donations are not eligible for deductions under Section 80G. Only permissible deductions made to prescribed funds are qualified for deduction. Another important point to note is if an individual taxpayer opts the new tax regime, this deduction is not available. What it means? An individual can only claim this deduction if he opts for the old tax regime and not the new tax regime. So friends, another important point to note is what will be the mode of payment to claim the deductions under Section 80G. 80G deductions can only be claimed if these are made through checks or demand drafts. However, if there are donations below 2000, that can be made in cash. In-kind contributions such as food, material, clothes, medicals, etc., and donations above 2000 rupees in cash do not qualify for deduction under Section 80G. Friends, let's now discuss about what will be the quantum of deduction under Section 80G. There are four categories, category A, B, C, and D. The first two categories, category A and B, are without any limits, wherein category A, you can claim 100% of the amount paid as donation. In category B, you can claim 50% of the amount paid in donation. Category C and D are subject to certain qualifying limits. We will discuss those in the subsequent slides. Again, category C, you can claim 100% subject to the qualifying limit. Category D, you can claim 50% subject to the qualifying limits. So let's now understand one by one what is category A, B, C, and D. Friends, let's now discuss about the category A deductions. That is the list of donations eligible for 100% deduction without any qualifying limit. A donation can be made to National Defence Fund set up by the central government. A donation can be made to Prime Minister's National Relief Fund, National Foundation for Communal Harmony, National Sports Funds, National Cultural Funds, and then this is the entire list of donations which an individual can make to claim the deduction. Category B deductions is a list of deductions eligible for 50% deductions without any qualifying limit. These are four deductions in total: Prime Minister's Drought Relief Fund, Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation. An important point to note is, as per the recent amendments, donation to these funds, the ones which are marked in S, right, that is Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, and Rajiv Gandhi Foundation, these are not eligible for deductions from April 2023, that is financial year 23-24 onwards. Category C deductions, these are the list of deductions eligible for 100% deductions. However, this is subject to 10% of the adjusted gross total income. We will discuss about what is adjusted gross total income in the subsequent slides. Let us now look at the list of donations. Donation made to any government or any approved local authority to promote family planning. If the donation has been made by a company to Indian Olympic Association or to any other notified association or institution to develop infrastructure for sports and games in India or to sponsor sports and games in India, then you can claim deduction under category C. So let's now discuss about the category D. These are the list of donations eligible for 50% deduction. subject to 10% of the adjusted gross total income. So let's now have a look at all these deductions. First, donation being made to any fund or institution that satisfies the condition mentioned under section 80G subsection 5. If the donation has been made to government or any other local authority to be utilized for any charitable purposes other than promoting family planning. Third, any authority constituted in India to deal with or satisfy the need for housing accommodation or for the purpose of planning, development, or improvement of cities, towns, villages, or both. Any corporation referred to in section 1026BB for promoting the interest of the minority community. If the deduction has been made for repairs or renovation of any notified temple, mosque, gurudwara, church, or any other such religious places, then also it will be under category D list of donations. So friends, let's now discuss what is adjusted gross total income. Adjusted gross total income is the gross total income reduced by the aggregate of the following categories. Amount deductible under section 80C to 80U excluding section 80G. If there is any exempt income, that will be excluded. Long-term capital gain, short-term capital gains under section 111A. If there is any income referred to in section 115A, 115AB, 115AC, 115AD and 115D, that will also be reduced to arrive at the adjusted gross total income. Let's now understand this with the help of an example. Let's say the gross total income was 14,50,000 rupees. This will be reduced by the short-term capital gain of 1 lakh rupees. Imagine that there is a LTCG also to the extent of 1.5 lakh rupees. Then there are ATC and ATD deductions of 1.5 lakhs and 50K accordingly. Once we reduce all these from the gross total income, we will get the adjusted gross total income of 10 lakh rupees. And the qualifying limit is 10%. That is 10% of 10 lakh comes to 1 lakh rupees. So this is how we will arrive at the adjusted total income, and the qualifying limit will be computed 10% of the adjusted gross total income. So friends, let's now have a quick look at the example. Here the example is for Measures Ram Private Limited, which is a company. Income for the financial year 23-24 is 7 lakh rupees. Then the donation has been made to an NGO amounting to rupees 2 lakh rupees. Then the qualifying amount for deduction is 50% of the donation made, which is 50% of 2 lakh, that is 1 lakh rupees. We will arrive at the taxable income after ATG deduction, that is income of rupees 7 lakh will get reduced by 1 lakh rupees, which is the amount of donation that has been claimed, and the taxable income will be 6 lakh rupees. Since it's a company, the tax will be calculated at the rate of 30%. So 30% of 6 lakh will be 1.8 lakh rupees. Had there been no donation made, the tax would have been computed on 7 lakh rupees. That is 7 lakh into 30%, which is 2 lakh 10,000 rupees. So tax benefit from ATG deduction is 2 lakh 10,000 minus 1 lakh 80,000, that is 30,000 rupees. So 30,000 rupees here in this example can be saved by claiming ATG donations made. Last aspect, which is the documentation required to claim the deduction under section 80G, there has to be a duly stamped receipt issued by the trust or charitable institution, and such receipt should have the details like name, address, PAN number of the trust, amount donated, and the name of the donor. Form number 58 is also essential if the donor wants to claim 100% deduction of the donation made. Remember that there is a registration number that has been allotted to each eligible trust. Such registration number has to be there on every receipt. Lastly, a photocopy of the ATG certificate has to be obtained, which is required to claim the deduction under section 80G. So friends, with this, we have come to a closure on this session. Stay tuned for more such upcoming videos.